In the food and water system, we saw mixed performance across the different subsectors in the second quarter of 2023. Some of the more consumer-facing subsectors, like food retail, food technology, and staples, were quite resilient as a result of higher consumer spending that we saw. The agricultural and water equipment sectors also performed really well as supply chain constraints eased, allowing for backlogs and inventories built up in 2022 to be worked through. However, some of the more commodity-linked subsectors really struggled due to the falling of energy and agricultural commodity prices along with the fertilizer prices. We do expect food inflation to fall for the rest of the year, but expect the agricultural commodity and fertilizer complex will likely tighten into the end of the year and into next year, especially if we continue to see volatility with regard to the weather and droughts persisting in key markets. Now, let's take a closer look at some of the key subsectors. So maybe I'll just start off with food retail. Now, the food retail names performed fairly well in the second quarter. The food price inflation we've witnessed has helped drive operational leverage and boost top-line growth for a number of the retail names. We still see value in certain retail names where the margin improvement story, we believe, is not being credited in the current share price. With regard to conventional food production, we've seen key global crops like soybean and wheat have rallied recently on lower crop yield expectations, mainly due to drought conditions in the US. Geopolitical risks could also drive prices higher, given Russia is unwilling to extend the Black Sea grain deal under the current conditions. We remain cautious on food inflation near term, but we see the possibility of a return of agricultural commodity inflation at the end of 2023. Now, in terms of agricultural inputs, price declines in fertilizers and generic pesticides have been more aggressive than expected in the second quarter, given the agricultural commodity backdrop. In particular, potash prices have fallen around 25% year to date, and ammonia prices are back to 2019 levels. Potash demand is expected to recover back to 2020 levels, and we do not believe this tightness is remotely being considered in the current potash producer valuations. Now, when we look at the food technology space, the big names in this area have performed well year to date, and that is because they've been beneficiaries of the more resilient consumer spending we mentioned earlier. Other alternative protein-focused companies have been struggling as a result of margin compression that we've seen, while the protein and crop processors have started to recover. Lastly, in terms of water management, in the water management space, the easing of supply chains and availability of parts has helped water equipment companies deliver on their backlog and start to work through the inventories that built up in 2022. However, we remain cautious on whether the rebound in construction spending can be sustained if interest rates remain at current levels next year.